Everyone, welcome back to the TraderLion channel. My name is Richard. With me is Ross Haber. And today we're continuing on with our America's Greatest Companies series, where we go over the greatest stocks of all time. And today we're talking about Crocs, which is relevant today because it just had a strong earnings gap up. And the chart itself is actually very similar to a lot of the 2020 leaders, with a 4x move in a very short amount of time and then some improper action later on. So in this video, we'll go through the fundamentals, technicals, and talk about really what contributed to this major stock increase. So Crocs, in terms of fundamentals, we all know them from the shoes. I personally didn't wear them. Ross, you told me you liked the flip-flops back in the day, so that's pretty cool. But definitely in that 2006, 2007 time frame, they were everywhere. They had partnerships with Disney to get accessories that you could put on the shoes. And if you just look at the earnings growth, I mean, this is really fantastic. And this is really what drove that huge price increase. So yeah, in terms of fundamentals, it had the story, it had the earnings backing that up. And so all that's left really is to look at the chart now. Ross, if you go back up and try to find a good spot to get in once the technicals really line up with the fundamentals. So Ross, I'll kick it over to you, and we'll walk through the weekly chart first of all, and then head over to Market Smith and look at the dailies as well as current price action.
Absolutely. Sounds good. So like you were saying, Crocs is relevant today because we've got, like you said, we just experienced the earnings gap up. We've got retail working at the moment at this very day. However, going back to what the sort of action we saw from the big growth leaders in 2020, this is very similar in so much as we've got an early stage base, a super powerful breakout, like you said, almost a little more than a fourfold move in a very short period of time. And no doubt there was a, I dare call it the Crocs craze. I remember you go to the dentist, you go to the doctor, everyone in the medical community had those things on. I never got the moccasins, but I will say the plain black flip-flops definitely have done my feet right. So jumping into Crocs chart here, we see it starts off with what looks like a very promising IPO base. We've got the breakout happening right there. Solid constructive week at the ultimate lows. Problem here is that the market, and we'll scroll up to the top and look right as this stock is breaking out right here. When we scroll up in just a second, we'll see the S&P 500, the broader market was selling off. So that's what ultimately happens here. The market gets heavy, so Crocs pulls back and ultimately builds a new base. You can see here we never undercut the low of its original IPO base, so that's showing at least a little strength there as the market's correcting. You can also see, and we see 4 weeks of tight closes. This is exactly the sort of action you're looking for. Remember, 3 weeks tight at a minimum is typically a continuation pattern. So this is a sign that we're getting accumulation down here at the bottom of this base. These are what you would call constructive shakeouts. Even though these weeks are closing red or closing down slightly and hence are red, these are still considered weeks, what we'd call subtle weeks of accumulation, or maybe not so subtle because they're so close to the highs of the week. In any event, we continue to, you see all of this action at the bottom of the base happens on below average volume. Another sign that institutions are accumulating. They're not in a hurry to sell while the market's correcting. And then again, as we scroll to the top, as the market begins to recover, you'll see the volume picks up to the upside as the stock builds the right side of its next base after failing the first time. We see further constructive action here, that nice tight action as we go up the right side, and that gives us our first legitimate or textbook pivot point. At this point, if you wanted to start accumulating based on the tight action in anticipation of it working, in this area, because it just so happens to be right on top of a key moving average there, that's always a viable way of entering a stock early if you wanted to, assuming there's not earnings in the way or something like that. But ultimately, this Crocs gives you plenty of time, and it's ultimately extremely liquid to just wait to buy the breakout right there, where your risk reward is optimal, as I like to say, where you've got the highest opportunity or the highest potential for the breakout to actually work with the least risk beneath you for, a potential huge move to the upside, which this winds up doing. And I'll point it out right now, other than this area right here where Crox shakes out below its 10-week moving average, which is this red line, the equivalent of its 50-day moving average on a daily. You can see it respects this moving average throughout the length of its run. And again, even if you were to use it as a point to work your way out of the stock and buy it back again, you can see, yes, you'd be buying the stock back a little higher, I'm sorry, but you still make plenty of money. Yes, you avoid a ton of aggravation. I always let, every time you're avoiding aggravation, remember you're putting capital into your psychological, emotional account, and over time, it makes a big, it makes a big difference for when things are working and the wind is at your back. Nevertheless, sure, if you were able to hold through this, then fantastic. But if not, you have the opportunity to get out and get back in without missing too much of the move and still benefiting from a huge move here. Anyway, as I often say, I digress. So we break out here on huge volume, you can see, and we're going to move to the daily chart in a little bit. We stair step up its 10-week moving average all the way up until this point. And as you can see, we're breaking out from 15. We finally, stock almost doubles in a short period of time. So it's not too surprising that we see a bit of a correction below its 50-day moving average. Again, though, Crox builds another base. You can see after the sell-off and you can see it's pointed here, you got some of the heaviest volume we've seen since the IPO coming to the downside. That's also a sign that institutions are headed for the exits, at least for a little while. So again, that accompanying the break below the 50-day is usually a key sign that it's time to step aside. But we'll see volume tapers off a little bit again towards the bottom of the base, and you start to see this constructive action right here. Lowest week of the base ultimately closes higher on highs. Volume is huge. That's pointing to accumulation, and you can see we've got the stock shook out to what I'd call logical support prior. Right. So that makes a whole lot of sense. Then we start to tighten up and move again. You've got that volume coming in here as you move up the right side. And I can't say, but I'm going to say from looking at enough charts, I think you might agree with me here, Richard, when we go to the daily, well, we'll have to see. I didn't mark up these charts, but this looks like maybe it ran up into earnings, and then typically you get an explosion like that, right, on an earnings announcement or some other sort of news or binary event just at a glance, but we'll see when we get there. And we can see the stock breaks out again after it shakes out below its 50-day, and it looks like my guess is it looks like it's respecting its 10-day moving average at this point. It holds up in an extremely tight channel. You've got, thank you, exactly there. And then even after it pulls back, on a closing basis, you'll see it never finishes below this red line, which is its 10-week line, until it ultimately tops and breaks again on huge volume here. And we'll see at the very top. So once again, we've gone, here's our early stage base, here's a second stage base, and here's our first stage. So now, again, once we get up to our third and fourth stage bases, remember our odds of failure go up significantly, especially with fourth, fifth, and beyond. Now notice this last base, if you will, is extremely deep, V-shaped. Yeah. And this is something Bill used to discuss all the time, where something goes from an all-time high, corrects 2 weeks into a super steep correction, and then comes back out in just another week or two. That's typically a sign of distribution that he would tell you is a sell signal. And sure, you do get another blast from 60 to 70 and change before it ultimately rolls over. But remember, we're not looking for the exact high here. And remember, we're never looking to sell. It's never an all or none. So when you see this sort of thing happen and you start to wobble, when you see the 2 weeks down and 2 weeks back up and you start to struggle and you've got the deep V-shaped base, it's very simple then also to just keep stops at that 50-day line or another relevant moving average. It does, it keeps the guessing out of the game. And for a liquid stock like this, if you look to the left, you'll often find something that makes sense where you can get out pretty darn close to the top without having to sit there and try and guess what day that's going to be. Again, remember this, it's a game of patience and interpretation. It's a systematic approach. And so it's letting things work for you and not trying to predict the future. And so, again, I pointed it out already in the very same way that you got the huge pickup in volume and break of its key 10-week moving average there. Same exact thing happens first close below. And I mean, this is a big close below. Again, it happens on massive volume. Again, the biggest volume since the IPO, and that's the end of it for a while there. And this is very similar looking to what we saw with, so many stocks, software stocks, whatever they were in 2020. I mean, this was almost a weak one in comparison, right? I mean, who wants rubber shoes when you can buy software that goes up 10 or 11 times in that same time period? And so, it's very easy to think, and, and a lot of these, if you look at them, right, Richard, whether they be, I'll just off the top of my head, APPS, and there's plenty of other ones that still have enormous, their most recent 4 quarters of earnings are huge. They've been accelerating, and in many cases they're still big estimates, and they probably will earn that money. But that's where, again, why we always say we buy on the fundamentals and technicals, but we sell only on the technicals, because those fundamentals can look good for 6 to 8. And when I say good, they can look excellent for 6 to 8 quarters after a stock has already topped and dropped 70%. And that happened to that's what happens ultimately to the majority of them at the top of any major cycle. So
fantastic. So I guess we'll go over to Market Smith now, Ross, and talk through the daily chart during that same time frame, and then move on also to recent price action, as it's acting quite well recently. So first of all, we've got this first base, pretty common occurrence here. It pretty much sells off that first day, forms a longer term IPO base, fails that with a reversal on high volume. Definitely some potential here to get in early on the right hand side and get something out of this move. But regardless, it sells off. You can see the market, as we discussed, entered a correction of some sort here. We see a lot of distribution on this left hand side, but as we go along, we see a little bit of signs of accumulation. This is where all those 4 weeks were tight here, 4-week tight closes, and you can see on a daily it's also quite tight. So let me clear my drawings for just a second. It moves up the right hand side, fails once again a little bit, but it sets up a nice kind of VCP type pattern, and forms some higher lows, and definitely gives you the potential entry point here if you had this on your radar at around 28.22, going through that nice pickup in volume a little bit down here. And then once again, another early entry point during the shelf, lines up pretty closely to this 30.75 pivot. And then the standard cup and handle pivot up here as well, around 35 or so. And from there, you're off to the races. A pretty vicious shakeout here, but if you're waiting for the closing basis, that should keep you in the 21 EMA. I think, Ross, is this the pink line here? Is that the 21 EMA or the 23 EMA?
That is it should be the 21-day simple moving average.
Okay. So this is the 10-day, the green line is the 10-day?
Green day. And then the red line is our 50-day, which was the equivalent of the red line on the 10-week on the other one.
Perfect. So yeah, from the shakeout, we have a super powerful move until we build out this base here, and a lot of distribution on this left-hand side. But something to keep in mind here is this very high volume day, this 9.5 million share day. It was a lot of volume and it's red. So you might think at first glance it's distribution, but it doesn't really make any further downside progress. And if we actually draw a line sideways from that point, this kind of acts as support later on in the space. So this is actually very strong, kind of subtle accumulation. And from there, if you draw some type of downward trend line from this point, or if I clear that, just sideways horizontal line, you get some chances to enter on before we get back to all-time highs. So yeah, I guess we'll move on from this point. We have a nice breakout, shakeout, and then re-breakout, which is a pretty common occurrence. So here we've moved on. This was the breakout, failure of that breakout and then re-breakout. And then we have a little bit of kind of base on base action, not quite here. And that takes a little bit of time to develop, but we get a kind of early cheat entry. You can see a decline in volume here, then a nice pickup in volume as it moves up quickly. So definitely a nice cheat area, and it moves up. And Ross, like you said, you've got a nice gap up probably on earnings here, 24.3 million shares traded. And from there, like you said, it just hugs that 10-day moving average until it forms kind of a choppy mess here. So yeah, this reminds me a lot of those 2020 winners, where it's just a lot of wild, erratic action, definitely different than this.
And I would say, and, in this case also, it gives you it's one of those things where I think even if it ran up into earnings and you're using, one of your earlier cheat points, you could have worked your way in back here and possibly, maybe, but anyway, there's a chance you might have been up enough going into earnings, just because it's, at this point, I can't imagine that, based on the action, just looking to the left, it's my guess it wasn't a 15 to 20% expected, implied move. You probably could have gotten away with holding some through that if you were early on there.
Absolutely. And getting back to this action, this is just obviously much different. The character changes up here. I mean, even if you got shook out here, bought it back, maybe through a short-term entry here, this is just up and down and up and down. It doesn't look clean, and there is a potential entry point here, and you get a little bit more out of it. But for me, it looks like something definitely is wrong here. It doesn't really respect the key moving averages anymore, and yeah, definitely this shakeout is quite vicious, and this gap down, unfortunately, most likely that was earnings. So if you had profit from down here, you might have gotten caught in that. But definitely, this bar would tell you to get out, basically breaking all the key moving averages at once on the highest volume traded, it looks like. So yeah, definitely very similar to a lot of the 2020 winners that we're seeing currently, and falling back below the 200-day moving average finally. And you definitely don't want to be part of that if you've got profit from even these bases right here. You're giving up a lot of profit there.
Absolutely. Yep. Once they start to get super whippy wide and loose later in the move, it's time to be careful. End of story.
Absolutely. Ross, why don't we go to recent price action and talk through that, because it has been doing quite well recently. Definitely better than a lot of the tech stocks. Yeah. So here, while the Nasdaq and a lot of the growth names has been correcting and consolidating, we see a nice kind of consolidation forming around 85 is the top, and then 70s. It showed a lot of respect for the lower 70s. And then we have a strong move up, and then an earnings gap up. Most likely you didn't have cushion to hold through it unless you had a nice reversal here. But yeah, Ross is pointing out, once again, we see stellar earnings growth numbers, sales growth numbers. And going over here, we see very strong estimates in terms of annual estimates, as well as estimate revisions being upward, and comps are rating at 99. And yeah, open up that fund ownership, and we'll see if there's any top quality funds in there as well.
And before you even, there's fund ownership, but I'm going to back you up one real quick. Sector and industry, as you can see, you're 82 out of 197. I won't go all the way back, but retail's been coming up. My guess is it's probably been climbing up the ranks, which is, well, I'll just throw it in there. The group, and I always get that sector and industry group is super important. So while we'd like to see them at least in the top half, preferably the top third of the database, I'm always paying attention to what's been climbing up over the last few weeks and months. So I'm going to give it back to you on fund ownership.
Sure thing. So yeah, here we've got a nice increase. That's what we want to see. And one high quality fund. Ideally, you see a couple more in there, but one is plenty. And going back to the chart, you have the nice earnings gap up, closing range greater than 50%. That's a winning characteristic. And here, let me.
Sorry about that. I was giving you a little more room right at the wrong time.
No problem. So here we've got the earnings gap up on huge volume, and then since then it's really shown RS ever since, really. And look at that RS line, just basically going to 1 o'clock. That's a super powerful move.
You've got the Jesse Livermore action working for you right there. Even if you waited until here, you're buying it out of, call it a bull flag through 100 on big volume. I think we'll all be surprised at just how far that goes after it goes through, just respecting, pick the moving averages, whether it be the 21, the 23. It's amazing. Sometimes it's not a prediction. I'm just, especially since I don't own any, and I'm not a fan of, becoming a buyer of retail and financial stocks that I typically don't buy anyway. Although I wish I did now, and in retrospect, it certainly couldn't hurt to own a big slug of Goldman Sachs and some Crocs or Yeti for that matter. But anyway, it's worth, I figured we'd point out, right? So earnings have come through. It looks super extended already, but the earnings and sales, that's exactly what you want to see. And let's just see how good the Jesse Livermore century mark works versus some logical moving averages.
Yeah, and maybe it pulls back to that key level, lets the moving averages catch up, gives you a nice low risk entry here against that level as well as these lows. And who knows, this could double from here. So yeah, definitely one to watch, and I think a great stock to analyze historically and learn how winning characteristics repeat over and over again. So with that, thanks for watching. If you enjoyed, please go ahead and leave a like down below and subscribe to the TraderLion channel if you haven't yet. And we'll see you guys in future videos.